New prescriptions, or NRXs, increased 103%, and the refill rate grew 355%. While we saw significant growth in these performance metrics quarter over quarter, there's also consistent pattern of growth. When we break down the quarter and examine the data month over month, as you'll see on slide 5, during quarter 2, month-over-month growth of TRXs was 35.2% in April, 26.5% in May, and 31.4% in June. NRXs were 20.4% in April, 10.4% in May, and 31.2% in June. And refills were 70.6% in April, 35.9% in May, and 40.6% in June. One other view of the data we track is on a 4-week rolling average that we discussed on our last call, and that's very consistent with our quarterly and monthly growth. We are encouraged by the fact that we're seeing consistent brand growth at the quarterly, monthly, and 4-week levels. Please note that these results do not include sales in the non-retail channel, which includes clinics, institutions, hospitals. In the second quarter, we sold an additional 2,291 units into the non-retail channel. Because we're so focused on TRX growth, I wanted to highlight what we think is an important contributor to that growth and the health of our brand: new prescriptions and refills, both of which grew in quarter 2. Every time we acquire a new patient start, we are potentially acquiring a customer for some time to come. Each NRX has the potential to manifest itself as a repeat customer with an extended time value to the brand, because NRXs can lead to refills, which can drive TRX growth. We are confident in the health of Twirla because we're seeing NRXs translate to refills and the potential for more patients to stay on the brand, which can in turn lead to more sustained growth. This leads me to a question I've heard from some of you as analysts and some investors. How does your growth compare to other combined hormonal contraceptives, and how should we think about these refills and these NRXs? This is a new metric we're going to be talking about. So we've never showed you before because it was still very early in the launch. I want to show you now on slide 6 a graph comparing the initial stages of the launches of Twirla to low estrogen FB, a low-dose prescription birth control pill, and one of the biggest brands in the combined hormonal contraceptive market. This slide compares the ratios of TRXs to something you may not look at very often, NPTRX, which are prescriptions for patients new to our product, Twirla, and low estrogen. In other words, the percentages of TRXs that consisted of prescriptions for patients who have never used our product before. These ratios increase when more new patients continue to fill their prescriptions. Over the first 26 weeks of launch, low estrogen FE developed a steady NRX volume that translated into refills, which contributed to the growth of the brand for years after the launch. The total prescription to new product prescriptions ratios helped us understand whether we were building a base for future potential growth. And when you look at the curves on slide 6, they're similar over a comparable period of time. While we're still in the early stages, Twirla's steady ratio of total prescriptions to new to product prescriptions suggests the brand could potentially sustain long-term growth. I want to be clear. We're not suggesting Twirla will achieve the market share success that low estrogen has. And it's important to remember that prescription volumes underlying these curves were much larger for low estrogen than they are for Twirla. But we believe one of the keys to a healthy, steady, growing brand is to deliver strong total prescriptions to new to product prescription ratios, which is evidenced here by both of these brands. Of course, new prescriptions and subsequent refills are not possible without growing our prescriber base. On slide 7, you'll see prescribers' growth over the course of Twirla's launch. As of March 31st, 2021, we had told you we had 855 writers. And at the end of quarter 2, June 30th, 2021, that number has grown to 2,087. and that numbers continues to grow throughout the third quarter. Again, you'll see here that the quarter-on-quarter growth is supported at a more granular level over month-to-month, as seen on slide 8. The growth in the number of providers writing prescriptions for Twirla has steadily contributed to a steady momentum in TRX growth. Also important to note is that the number of TRXs each prescriber is writing, or their productivity, if you will, also continues to grow. Based on the early performance growth we are seeing with Twirla and how that compares to the growth trajectory of another brand we consider to be a success in the category, we're pleased with the progress and the health of Twirla. But the question we continue to challenge ourselves is, how do we accelerate and sustain that growth? And the answer is focusing on two major efforts: market access and our marketing efforts to pursue this goal. So I'm going to start with market access. We are seeking to increase access to Twirla through a variety of efforts, including a focus on expanding access and reimbursement coverage for Twirla across commercial and government health insurance plans. In the second quarter 2021, we expanded our Medicaid coverage. Twirla is now available to Medicaid patients in approximately 75% of the states, either through traditional Medicaid and/or managed Medicaid. With these new additions, we have coverage of approximately 50% of the total Medicaid transdermal or TRX market with no restrictions. Overall, we have access to approximately 55% of commercial and government CHC claims. We are encouraged by this trend, and we view this as another source of ongoing market growth for Twirla. We remain committed to expanding access for Twirla for all appropriate women interested in using our product. In addition to managed care and Medicaid access, we are now exploring access through additional state and university clinics, Planned Parenthood, and other non-retail sites in an effort to make Twirla available to women everywhere. For example, we saw significant growth in the non-retail volume in state clinics in quarter 2. Now on to marketing. We believe the performance metrics we reviewed at the top of the call reflect what we consider to be a very smart approach to DTC marketing spend. As I said last quarter, we've made a large incremental branded consumer marketing spend quarter over quarter starting in quarter 2, while maintaining our disciplined approach in making the right investments at the right time to encourage strategic growth. As healthcare provider awareness increased leading up to and throughout the second quarter, we made what we believe to be appropriate and necessary increase in branded DTC digital marketing investments in late May and early June. So your takeaway here is that we're very encouraged by the growth we're seeing based on our very disciplined DTC spend. So we expect TRX, NRX, and refills all to continue to grow as more and more women in our target audience gain exposure to Twirla advertising. Last quarter, we mentioned we are expanding Twirla's brand digital efforts to a targeted audience by advertising on the dating apps such as Tinder and OkCupid, and now we can report that relationship in less than a month has exceeded our expectations. Moving forward, we'll expand our presence on the dating apps, advertising on Spotify, and engaging influencer partnerships, all designed to drive awareness and ultimately trial of Twirla. In addition to the digital media campaign, we have identified and are pursuing new opportunities to drive consumer awareness and potentially lead to future growth. At our next earnings call, we look forward to sharing with you progress on partnering with additional channels like telemedicine, as well as potentially Planned Parenthood and student health centers. Again, we believe all these efforts contribute to awareness, which we expect to contribute to more new starts and in turn lead to higher refills and ultimately stronger TRX performance. We believe all these components are a sign of a healthy brand and longevity for potential future growth. Before I turn the call over to Dennis, I want to reiterate that we remain steadfast in our belief that at peak, Twirla can capture up to 5 to 8% of the $4.1 billion combined hormonal contraceptive marketplace. Thank you, and I'll turn it over to Dennis to talk about our financials.
Thanks, Al, and thanks to everyone for joining. As Al commented, we're really excited about the growth potential of our business, and I want to give you more clarity around second quarter from a financial perspective, including a bit more detail on how Twirla's performance has been trending year to date, and some general parameters on how to think about our results for the full year. If you are following along in the deck, I'll be taking you through what is included on slide 11. Wholesalers completed their work down of inventory levels from the initial stocking level last December. And as a result, we realized $1.2 million in net product sales revenue for the second quarter of 2021. The rate of inventory depletion came broadly in line with our expectations, and we anticipate that going forward, our product sales revenue will more closely track to increasing script demand, and that wholesaler restocking should then more closely reflect retail sales. This aligns with our initial full-year expectations for Twirla, which were based on the assumption that sales growth would increase in 2021 as product samples are worked through, our prescriber base expands, patient awareness of Twirla increases, refills begin to occur, and overall, we gain traction in the CHC market. Regarding our quarterly cost, our cost of product revenues for Q2 were $1.1 million, which included expenses for supporting our manufacturing and distribution, as well as personnel costs, and $500,000 of non-cash depreciation expense. We expect these fixed costs will become less significant as our sales grow with anticipated volume. Our operating expenses were $16.7 million in Q2 versus $10 million the same period a year ago. We expect our third quarter expenses to be similar to this, but they could be $1 million or $2 million. Either way, it's a function of how fast sampling and other costs come, but these are relatively stable costs for us. As we closed out the second quarter with a net loss of $17.6 million or 20 cents per share, compared to a loss of $10.8 million or 12 cents per share for the comparable period in 2020. At June 30th, 2021, we had cash equivalents, and marketable securities of $31.1 million, compared to $54.5 million at year-end 2020. As a reminder, we have access to a $25 million capital through our loan facility with Perceptive Advisors, including a tranche of $15 million in 2021 and a tranche of $10 million in the future. They'll be available both contingent on a predetermined revenue target. We'll continue to monitor our spending closely, and if needed, we have the ability to modify our sales and marketing spend. Additionally, we have the potential to access additional capital through our ATM, our at-the-market facility, which we can raise up to $50 million in gross proceeds. To date, we've sold $7 million under this through common stock through the ATM. Our team continues to be excited for what lies ahead. We believe we have established and remain encouraged by the momentum for Twirla. We remain focused on maintaining our disciplined and nimble approach and making the right investments to encourage strategic growth and maximize shareholder value. With that, we are happy to take your questions. Operator, you may now open up the line for Q&A.
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. Again, that is star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. I have our first question coming from the line of Oren Livnat with H.C. Wainwright. Your line is open.
Hi, guys. Thanks for the questions. I'm sure you're aware that there is a pretty big discrepancy out there in some of the third-party data services, with, from Symphony and IQVIA. I happen to generally rely on the latter, and it looks like it was more than 2x the volume, I guess, you guys quoted and what Symphony is saying for 2Q. So I'm just wondering if you can talk a little bit about, if you have any understanding through your diligence as to what that may or may not be, and where that's coming from. It seems to have maybe corrected in the last couple of weeks. And then, help us just understand going forward, if the lower, Symphony volume is the right number, what kind of economics should we be thinking of around those prescriptions or those or slightly higher dispensed prescriptions out to pharmacy you're seeing, so we can model this going forward? And I do have a follow-up. Thanks.
Hi, Oren. Thanks for the call. So Symphony and IQVIA, we are Symphony subscribers. We get a little of the IQVIA data. They're really not off. If you have to look at it, Oren, in two buckets, if you will. Mm-hmm. There's the retail segment. You just can't look at TRX. I guess my point. If you look at retail, which is where the bulk of the prescriptions go through, they're not off. They're really not off. So the way we look at our business, we say what's gone through retail, which is the more traditional channels with pharmacies. And then in this segment, it's different. There's a pretty big all other category that we started describing. We got some business that ran through there and some of the mail order business and things like that. So we think what happened, and the operative word is we think, that IQVIA's algorithms that forecast or trend these all other categories, we're off. And, we alerted them that we think there was, it was off, and I think they did correct themselves. So I think the way we look at the business, Oren, and the way we model, we say, let's model the traditional channel, which is retail. It's not, they aren't off, the two services. And then we layer in the all other channel on top of that, saying, okay, what else is happening in the all other category? Because the all other category, Oren, is a little bit lumpy. There's big purchases sometimes. There's a lot of our mail order scripts are going through our partner Sterling, and the algorithm is just sort of projecting that. We think, and I really emphasize the word we think because we spent a little bit of time. We are aware of it. For instance, the bulk of the Bloomberg terminals rely on Symphony. So I know a couple of you rely on IQVIA, but we did the best we can to stay on top of it. But the sweet spot of the market, meaning the retail segment where the bulk of the patient goes through, the databases are very similar. If that makes sense.
Yeah. Okay. And then just to the basic, I guess, gross to net. So you know what your contracts are, and I do want to touch on contracts again in a follow-up. And I guess you can see the volume going out the door and what you're shipping to wholesalers to restock. But how do you think we should think about gross to nets now in Q2 and going forward to sort of come out with a realistic value per script, so to speak?
Sure. We haven't guided it, and it's still on our end that we're in a bit of a moving target. We mentioned these Medicaid contracts. We're just getting them under our belt, and then going forward to project gross to net, we have to say how much of our business is going to go through Medicaid. So until we get all the base of contracts up and running, we haven't been able to guide it. So we're still trying to get our arms around it because it really does depend on the mix of patients. We know what we pay for commercial lives, we know what we pay for Medicaid lives, but until we see how much of our business runs through each channel, we're not in a really great position to, do much with gross to net. But all in all, we like the contracts. We like the access. Our primary goal is access at a decent price, and I think we've achieved that.
Okay, and just to talk about access, I have no doubt that, your demand is ultimately way higher than where it is today. And, in a massive market, there's clearly, a sliver that's there for you. But, you do talk about access and that's crucial, right? It has to be easy to get. So when you talk about quote unquote access to 55% of commercial and government lives, I think I've asked you this on, pretty much every call we've ever done. What does access really mean? It's one thing to not be blocked. It's another thing for it to be affordable or easy to be prescribed and fulfilled at the pharmacy. So, what are you seeing and how does the ACA, how's that playing out in terms of preferential access?
Yeah, I mean, when we use the word access, we mean that it's easy for a doctor to write. So when we quote 55%, it means it's in a formulary position that he can write the drug. So when, in theory under the Affordable Care Act, everybody can write the drug, and we could quote 100% because in theory, patients are supposed to be able to have access across all the commercial plans, with their doctors just writing a letter of medical necessity. So, but, we try to, if you will, quote where there's easy access, I guess, Lauren, is the way we think about it. The 55% is where doctors can write it and, get the drug through. But like you said, under the Affordable Care Act, these drugs should be more broadly acceptable, but it involves work by the doctors. So, we don't want to overstate it, so we want to keep chipping away at those other ones. And, we've added some more, and, and we expect going forward you'll hear that number getting bigger. So, but that's how we're using the word access. But very good question.
Okay. I appreciate the help. Thank you.
Next question coming from the line of Tim Lugo with William Blair. Your line is open.
Thanks for the question and congratulations on the progress and also for providing us all the KPI metrics. That's very helpful. And I guess going into one of the non-retail channel, I believe you mentioned in your prepared comments it was around 2,000 in the quarter. How meaningful do you expect that channel to be kind of quarter over quarter throughout the remainder of the year? And is that something that could fluctuate Q3 and Q4, or what are your just expectations there?
Well, Tim, first of all, thanks. And, we appreciate, we'll try to give this transparency. We like showing the metrics the way we look at the business. So thanks. We appreciate that comment. Yeah, so that channel's really an interesting one for us. So like Oren's question, if you heard his question, in some respects, they were picking up some business and straight lining it, if you will, on one scenario. So that was kind of on one algorithm. And then on the one we quoted, Tim, was I don't want to say direct. They didn't buy the product from us. They bought it from a wholesaler. It was a state clinic, that just bought it directly, 2,000 units, directly from one of our wholesalers, which was an exciting day to get that big of an order. I got to tell you, that's about what went through the retail channel that month. So we'd like to think that channel is going to become more important, Tim, but it's early days. How's that? I think that would be conservative the way you think about it, so we get our legs under it. But it's exciting, though. I think what makes us excited, Tim, is that these public sector accounts, and there's a ton of them. This is just scratching the surface. This happened to be a state clinic, And the interesting thing, and I have to say, we didn't have a rep in front of them. They just heard about the brand. They thought the brand was great. They put a big order in, and now we're trying to say, you want more, So in the meantime, there's a lot of Planned Parenthood business, student health center, telemedicine. So we haven't begun, Tim. So I think for us, we want to kind of think about the business and our retail as our bread and butter. And then we're just going to have to keep you updated on this business. It's lumpy, Tim. I don't know what else to say, but in a good way. Because they don't order every day sometimes. So it's almost like the way you can follow hospital businesses, Tim. Sometimes they buy big boluses at once, and so we're going to have to just monitor that. So the good news is we have customers, Tim, that we didn't even know about. So we're excited. Like I said, and we'll take this problem every day, Tim. Every day of the week we'll take this problem.
Exactly.
We got to learn to. We got to learn to get more and pull it through, but we're pretty excited though that there's a new channel emerging for us.
It's kind of the power of a large market. I understand. I see that in some of the other sectors as well. So, I guess drilling down a little bit more onto access, and maybe you talked about this with Oren's question, but we're approaching kind of the contracting season for commercial payers when we tend to see announcements. Is this something you're actively pursuing, and should we expect kind of a 2022, just something to watch out for in the contracting season as it approaches?
Yeah, Tim, great question. The answer is it's the bid and ask season. Yes, we're in the hot and heavy of it. Also that has to do with some of the Medicaid business we've been winning, because in fact we're winning early contracts for next year. So we're right in the heat of the cycle. Yes. So I think you're going to start hearing us either reaffirm some of the coverage we have or hopefully keep adding to it. So, our strategy is to build the book of business we've got, and hopefully we'll have more good news for you next quarter, and then supplement it with that whole other channel, if you will, the non-retail channel. So we're scrappy, Tim. We're fine. But yes, we're in the bidding. Dennis is signing off on a lot of bids, right now. Yes.
That sounds great. Thanks for the update.
My pleasure, Tim. Thank you.
Our next question coming from the line of Leland Gershel with Oppenheimer. Your line is open.
Hey, good afternoon, guys. Thanks for taking my questions, and thank you for the very informative update. I'm glad to see the OpEx is kept under control as you continue to grow the product. Wanted to ask a few questions. First, in terms of sampling initiatives, I think, Al, in the last call you mentioned that those may be easing as we get through the second quarter. Perhaps those have continued more than we had expected based perhaps on greater physician demand. Or interest. Wanted to kind of ask what your kind of current sampling looks like and how that may wind down as we get through the rest of the year. Also wanted to ask about the types of patients who are coming on Twirla. If you could kind of give us a rough breakdown of patients who've been on the legacy patch versus those who are new to contraception, or perhaps those who've been on an oral and are switching, and any directional trends you may be seeing there as Twirla has been on the market. And then finally, as more and more women out there are becoming aware of the product and are coming to see their doctors, and with COVID easing a bit, more and more patients are going in to see their doctors, are asking about it. You have that, and you also have doctors who may be familiar with the old patch and may have some reservations and may not be used to the new patch. So I want to ask, what opportunity does that create for Agile to kind of provide a way for docs to be more informed about Twirla and its differentiation, and perhaps have less reservation about prescribing it? Thanks.
Right. But if there's a run-on sentence, that's a run-on question. You got 4 parts. Let me see if I can do this.
Sorry.
If I didn't get it all. I'm going to go to number 3, which I think is the users. Like you said, who I think was, who we seeing in the marketplace. It's really interesting. It's number 1, about 50% of all our prescriptions are new to contraception, meaning they're a new user, which is about what we thought, but trending on the higher side of what we thought. So the doctors are using our product, Leland, where, and that's what the ask is by our reps. We say, hey, why don't you give it a try on a new patient in your waiting room? Because we think it's a little bit less confrontational, if you will. Now, I've also got the question, do we target Xulane or the other patch or Xulane users? And the answer is absolutely yes, we do. Related to that, so we go to doctors, that have already feel comfortable with patches. So we target their offices, but we don't say take them off the other patch, if you will. So it's related to the way we target doctors, and I'll get to your 4th question, and then I'll work backwards again. So 50% are new users, 25% have come off a pill, not a patch. So about 75 to almost 80%, Leland, are been either new to method or new to patch. And then the remaining percentages are scattered around ring users, patch users. So that's really great. But to your other question about, if I was saying what surprised me so far, it's slow to get a doctor to write a patch of any kind if they've never written one before. So I think we've talked before, Leland, a lot of the young doctors are, a little bit reticent of using patches. So our low-hanging fruit is on patch users, and there's a lot of them. So, the other ones we're not giving up on, but we're really, in effect, it's going to take us more time. So samples, was one of your other questions. I'll let Dennis comment to your comments about OpEx, but samples continue to be critically important. What we're finding in general, there's still a significant demand as COVID opens up offices, Leland. I mean, for the first time, our reps are regularly getting into sample closets for the first time, and we're just saying we want them to own those closets. We're saying don't be shy. So I don't think sampling demand is kind of, at a kind of steady state yet. So we did our first loading of the channel, if you will, in a good way loading, not bad loading. Getting them out deployed, but still our reps are a lot of times on Zoom calls, and it's hard to judge seeing a doctor. So what we're finding from the field, and I'm meeting with our regional managers this week, is that there's new demand for samples is just in general. So I think we're still using a decent amount of them, you want to mention about OpEx control, he's very nice to you. So
Yeah, no, I mean, we do. We've been pretty, guarded. We really have tightened down on our OpEx. And going forward, as I said, we expect it to be within $1 million or so of what we had this quarter. And that's really the way we're managing it.
Yeah, and so we appreciate, Leland, because, I mean, we try to make good bets, if you will. I mean, we bet on what we think works, and we're, everything else, it's just got to be secondary at this point. I mean, we have a responsibility to our shareholders to keep our heads about them. But I think based on the performance we're seeing and the brand's growth, I feel like we're making good bets. So, and Dennis keeps me honest, as you know. So, we're putting the bets in the right places.
Excellent. Terrific. Thank you very much, Al and Dennis.
Did I get them all? Did I get it all, Leland?
You got them all. Thank you so much.
All right, thanks.
We have our next question coming from the line of Daniel Basby with RBC Capital Markets. Your line is open.
Hey, good afternoon, guys. I've got a couple questions. First, I think I heard you reaffirm your 5 to 8% peak market share target earlier on the call. Can you talk a little bit more about the factors that give you that confidence in light of some of the competitive developments we've seen this year with Amneal launching a generic Xulane product and now Viatris talking about introducing a low-dose version of Xulane?
Yeah, I mean, I have to tell you, you were one of the first ones that kind of predicted this, and here's a bold insight. Number one, since the second patch generic came out, our share's grown. They've taken all the share from Xulane. So that's good for us, and that's what you had originally said in your notes. The second insight you had was really interesting. I don't know if you've looked at it. Right now in the middle of COVID, the CHC market's rather flat. The only growth area is patches. It's really interesting. We're outpacing the market. So the patch pie continues to grow. And so my confidence has to do with patches becoming more mainstream again, which we thought. So you end up being right, Dan. You had this one when you said they weren't going to clip us, and they were more likely going to clip each other, and that's what we're seeing in the marketplace. So the good news, the second patch didn't ding us at all, and it didn't ding the category. So the category's growing, and we're hoping the category continues to grow as we kind of unlock out of COVID, even though this category's been generally flat. But it's good. And the other part of my bullishness, it has to do with our accessing these. You heard these long conversations about these other channels. I think that we can continue to follow the patient and say, where else is she going besides CVS? Telemarketing, Planned Parenthood, student health centers, and these state and county organizations. There's a ton of business out there. So that's why we're bullish. If I feel like we're just, I love the growth we posted, but we're not at any means done. So we're just, just still a lot of the market we haven't been in front of. So, but that gives me the confidence to kind of reaffirm that. Patches look like people are getting back in vogue again with them, and it's our job to make them pick our patch. And then I can't comment to the other patch. I mean, I saw what you saw. It appears it's only going to the clinic. It looks like it's years out. And at this point, you take a look at the market share of Xulane. Xulane is dropping fast. I mean, the question is, how much share will they have left when they launch that? So I mean, their competitor took a lot of gas, a lot of share away from them. And like I said, we kept growing. Good questions, though. Thank you.
Got it. Thanks for the color. And just one follow-up, perhaps for Dennis. I could probably do the math on cash runway, but you mentioned the $25 million tranche you have potentially available. Can you share anything about the achievability of those targets? Do you expect to be able to access that cash, or is that still a little bit up in the air?
We got the $31 million right now, and we were able to tap the ATM. On Perceptive, there are targets there. We haven't disclosed them. They're challenging targets for us, but they've been a great partner to us for years now, and we'll continue the dialogue, and we'll let you know. It's not a slam dunk. We'll get that money from them, but yet, we kind of trust the partnership, and we'll continue a dialogue.
Okay, got it. Thanks.
Thanks, Dan.
Now our next question coming from the line of Naz Rahman with Maxim Group. Your line is open.
Hey guys, thanks for taking my question. Now that you've seen more demand sales, are you guys seeing the demand script, the patients see a $0 copay, or do you find them mostly using the copay cards or paying for the product? As a follow-up question.
Yeah, it's a tough question. I don't have them all at the top of my head, but a significant amount of our patients get it for zero copay, just because it's under the Affordable Care Act. And so, so it's sort of answer your question, it's going to be all around the board. The Medicaid patient, when we're in a strong contracting position with them, some states it could be $2 or $5, and it's really virtually zero. So on those books of business, the patient is really paying virtually nothing. So that's really good for the patients, and it's really good for us. Our copay business, our copay cards, I don't believe are a runaway at any means. We use them on a really situational basis. That's something Dennis keeps an eye on. We're releasing a lot of cash in this case to the patient. So, we haven't over-relied on our copay cards. It's a real healthy brand without them, knock on wood. But it's there in case we need it. It's meant to be, I hope it sounds right, but we don't want the copay cards, we want the copay cards to be a bridge to, a better outcome for the patient, either navigating her zero copay, or, us getting on eventually on formulary. We just can't see us running a long-term business on the back of copays. I think they're very needed as a situational basis, if you will. And that's the way we use them, very strategically. But we're pleased that our overall growth in that is pretty good right now. We haven't over-relied on them, knock on wood. So far so good. It's a situational bridge for patients or plans, but the bigger idea is get on formulary. We as a company believe in getting on formulary. We just can't run a business, not in a kind of a good relationship with our payers. So we just are really always at the table with them trying to either get formulary access or get better access.
Got it. And the patients that are getting Turla, at this point, how many cycles of Turla scripts are they getting for? Is it still like 1.3 to 1.4x months? Yeah. Or are you seeing patients get longer prescriptions?
No, it's pretty steady. You'll see in those graphs we provided when you get a chance to look at some of the screenshots, you'll see TRX, and if you look at the ratio, it's still 1.3. Some weeks it's 1.32, but it's hovering. We expect some plans are, in the mail order business, they're allowed to get more, if you will, cycles at a time. So if anything, it should eke up a little bit, but we're not seeing it, it's pretty steady right now. So I'd leave it at that until we talk otherwise. And some of the negotiations we're in, they're going to be letting doctors write longer prescriptions, and that'd be great for us, by the way. We'll take it. But for right now, it's really steady at around 1.3. Which means, which is, what that means is, for those that are kind of new to it, is, that means every TRX is worth 30% more to us. So rather than, the value of the patient on that first script is obviously a lot more. It really ends up being a big number. You could see on the curves. It doesn't take much to get these curves bending upwards pretty quickly because of that and new refills. And, it's a good business. We're just getting to a point, we're getting a base of refills. We got some new business coming in, and we get that 1.3 multiplier, and it's starting to become a real healthy little business to run. So we're excited. So our job is to get new prescriptions. The more we get a multiplier on them.
Got it. And the final question is, some of the larger non-retail orders you saw in 2Q, is there like a potential to sign a recurring contract with those purchasers, or would they just have to kind of go through wholesalers?
No, that is a fabulous question. The answer is we'd love to sign an agreement, because if not, we're at the whims of a purchasing manager that we'd like to be in a long-term better relationships, that it's not just a here and there purchase. So the answer to your question, we would love to do that. That goes with Planned Parenthood, that goes with student health centers, that goes with all these clinics. We just have a bias, to get under contract. So, we just like that. For now, it's a little bit more lumpy, but just from our own planning, it keeps us better organized if we can get them. And, for right now, they can buy the product through the wholesalers, which is great. So we could see the movement. There's a fair number of hospitals around the country to buy our product, but that was the most significant one. they're starting to get doctors and, that's just for treating patients in university settings. And so these kind of like non-retail businesses are starting to get interesting enough. But we don't want to chase it. We want to develop a strategy for opening this channel in a big way. But for right now, we'll take the business. We'll take the sale. That was a nice book of business. As I told Tim when he asked that question, that was about as much as we sold in the retail channel that month. So one order, was great. It was a good day. So yes, we would like to get on the contract with them and develop a strategic relationship with them.
Got it. Thanks for taking my questions.
My pleasure. Thank you. Thanks for listening in.
Thank you. There are no further questions at this time. I will turn the call back over to Al Altomari.
Well, thank you, operator, and thank you everybody listening in. I'd like to close today by saying that we believe we have the building blocks in place for continued growth and remain on track to achieve our near-term goal, which is establishing Twirl in this multi-billion-dollar hormonal contraceptive market. And I hope you can hear some of the excitement in our voices, and that we believe we're just on the way on that journey. Number one, we have an approved product that's growing in all the major performance metrics, in a valuable market, and we believe it's only scratched the surface. And we're unleashing in a very responsible way DTC advertising, and that we're further developing some of these channels you all asked me about. But in the meantime, our bread and butter is in the retail market, and we need to continue to get doctors aware and comfortable writing our product, and particularly those that are already comfortable writing patches. While we're happy with the growth today, we believe there's a lot more on the table. So hopefully, as we talk to you in the future, you'll hear more about how these programs are working and more about our growth. I'd like to thank everybody for joining us on the call. Be well as always, and we look forward to providing you updates in the future on the advancement of our business in our next earnings call. And hopefully we'll see each other, hopefully face to face in the not too near future. So thank you, everybody. Be well and be safe.
This concludes today's conference call. Thank you for participating. You may now